Melissa, let's start a talk about that broadening that we've seen in this market, not just whether it sticks, but whether the Fed rate cuts or the start of this easing cycle, whatever it looks like, is that the main catalyst for this?
I think that is certainly one of the catalysts for it, because it's hard to find anything else to point to that might be explaining these various moves. I think it's maybe easier to explain why tech seems to be stalling out a little bit. It's become such a big part of the market, and trees don't grow to the sky, so it's not surprising that it has stalled out. It is maybe a little bit more surprising that some of these dividend-paying sectors have done so much better, though.
Have you embraced that, though? I mean, because we talk about all of the calls that we've seen by strategists and other sort of investment professionals saying, look, now is the time to start looking towards some of these safer plays, or traditionally safer plays, if you will, financials, real estate, utilities. We've seen utilities do very well this year. In fact, I think last time I checked, it's the best performing sector in the S&P 500.
Yep.
Yeah, I've noticed that as well. And I think that as rates come down and investors are seeking some kind of income, that utilities are certainly a good alternative. I've also seen some analysis of utilities actually benefiting from the AI revolution as they embrace some AI techniques and can run more efficiently. And so, yeah, it isn't that surprising to see utilities doing so well, along with real estate as well.
So what's the path of least resistance, do you think, this week? I mean, is it going to be buy the rumor, sell the news for the broader S&P for Wednesday? You have to kind of stick to your guns and buy on dips of where you think is going to outperform. What's your playbook?
I think my observations have always been it's buy the rumor, sell the news. And if we've got this, kind of interplay between is it 25, is it 50, I think 25 may end up being a little disappointing. Mm-hmm. And 50 may be where the sweet spot is, although we still think we're going to see a 25 basis point cut. And because, the Fed has been very cautious up till now, I don't see any particular reason that they would change that in the absence of, kind of new data that confirms that they really need to get going on these rate cuts.
Which is really where BlackRock's call came in that Romain was talking about, that they're going to go underweight the front end because there's just too much optimism for big cuts coming in from the Fed. What do you think of that call?
Well, yes, there does seem to be potentially too much optimism for the big rate cuts. But I think you also have a potential flip side if the rate cut is, 50, that maybe investors start to say, oh, wow, maybe the economy is worse than we were thinking. And that's also not good news. So, I agree that, we probably will get 25, and that, maybe we need to be cautious on that 50, but for two different reasons.
Do you think, well, first of all, would you be disappointed? And more importantly, do you think the market's going to be disappointed if you don't get a more aggressive move on Wednesday, i.e. 50 basis points, or in absence of that 50 basis points, at least some rhetoric out of Jay Powell that suggests that the pace of those rate cuts would pick up?
I would not be disappointed if we only got 25 basis points. I actually think the economy has seemed to do reasonably well with this higher level of rates that we've had for some time. So I personally don't see the need for that big a rate cut. I also maybe don't expect Powell to have a lot of rhetoric about what's coming, because he rarely does. I think one big issue coming up is the election. You might have heard that there's an election in the U.S.
Oh.
Unfortunately, yes. We have heard this.
And I think some of the policy statements that have been made, may suggest a more inflationary environment, and that could potentially give the Fed pause, not necessarily on this cut, but and maybe not on the next cut, which comes right after the election, but maybe going forward after that.